Hey everyone, and welcome back. One of the coaches at Unga Academy here. And today, as usual, you know what we're going to be doing. We're going to be talking about what happened and what was of interest in the markets this week. Before we begin, though, as always and as usual, I invite you to please subscribe to our channel. Go and click on that little notification bell and go and leave us a like to this video as well. Thanks so much. Hi, we are the Unga Academy, and we teach traders how to make money in the markets. Our founder, Andrea Unga, had been struggling with trading for years until he developed his automated trading method, which he used to become the only 4-time world trading champion. Subscribe to our channel for free tips and tricks. Okay, so it's been quite a positive week, I'd say, for the markets, especially for the European stock indexes, which are up more than 3%. 3.4% for the Euro stocks, 3.4% also the DAX. So the European indexes have done quite well. The mini SP 500 performed quite well, and that's currently up 2%. The Nasdaq is slightly negative, though. And for sure, of all the indexes, this market is the one that's been the weakest lately. We can see it clearly by looking at its one-month returns. And at the same time, we've seen this rise in the markets. We've also seen an increase in bonds, which isn't usual. The T-bond in particular moved up 2.2%. And again, European bonds, they're outperforming the American bonds. In particular, take a look at the 10-year German Bund, gaining 2.58% against the 10-year US bond, which is gaining only 1.26%. In the energy market, we can see a 10% increase in RBOB gasoline, which is the most impressive performance among the oil derivatives this week. Heating oil, also performing exceptionally well at a positive 9%. And hey, don't forget, we did see it at positive 30% in 1 month. A little bit further behind, though, is crude oil. And on the other hand, we all know that natural gas has fallen significantly in the last 3 to 4 weeks. This week, however, it has resumed rising and went up by 4%. As far as the metal sector is concerned, the returns aren't particularly noteworthy. Among the metals futures that are going up the most, it's platinum. On the other hand, gold, that remains pretty weak. We can see that this market has lost 0.44% this week, so it's continuing to move in a typically bearish way. As for the meat sector, we got the lean hogs, which lost negative 3.7%. Conversely, in the weeks before, you remember it had risen quite sharply. Nothing else to report in the meats market. So let's turn instead to the soft commodities, where we see several negative returns. In particular, coffee is down almost 7.5% this week. So this market is in a clear downward trend right now. And cotton, it also lost 7.32%. On the other hand, orange juice continues to climb and has broken this week's high again, albeit with a gain of only 2.95%, but still. As far as the grains market is concerned, let's take a look there. Only negative returns. The biggest loser is wheat, which is more or less at pre-crisis or pre-war levels, if you will. Turning to the currencies, it's interesting to note the performance of the British pound, which has recovered 2.58% against the US dollar this week. There has been much talk about its decline, but few address its remarkable rebound that has taken place over the past month. The euro-dollar future is also gaining, and it's up by 1.28% this week. And currently, it's hovering around parity at a value of 1.0015. Let's move over to Bitcoin, where finally, we can see some signs of life, which Bitcoin went up by 7% in the last 5 days. You can see volatility is down sharply compared to its historical trend. Precisely because, as we know, it's been moving sideways in this trading range for several months now. If we take a look at the volatility of equity indexes, we see decreasing volatility in the short and long term, especially in the European indexes. However, there is medium to long-term volatility, which remains higher for US indexes. Let's now take a quick look at the volatility term structure, which is built using the volatility indexes on the SPX. We're in contango right now. Well, not in full contango, but we do have the 9-day volatility that has higher values than the 1-month VIX. We're basically in contango. But the volatility remains relatively high compared to 2 or even 3 months ago. However, if we look at a longer time frame, we do find more or less a median value of the VIX in terms of the range that we had from March until now. So for the moment, traders don't seem to be particularly concerned about the future performance of the equity indexes. Let's turn our attention now to the rollover calendar. I can already tell you that there will be no rollovers next week, so I'll just report the first scheduled rollovers for the next weeks. The first rollover will be Cocoa Futures on November 8th. The VIX will follow on November 9th. And then finally, on November 10th, there will be coffee. Yum. Okay, guys, before we say goodbye, I want to give you some advice. If you are interested in systematic trading, please go and check out the link in the description of this video. And through this link, you'll be able to watch a free presentation by Andrea Unger, who will introduce you to his trading method, the Unger method, which he used to win the World Cup Trading Championships in real money trading 4 times. And also through the same link, you'll also be able to get the bestseller, the Unger method, covering only the shipping costs, or even book yourself a free strategy consultation with one of our tutors. And guys, that is it for today. Please remember to subscribe to our channel, click on the notification bell, and leave a like on this video if, of course, you enjoyed it, which we hope you did. And that's it for the week. Have a great weekend, and we'll see you soon next week. Bye-bye for now.